Hi there, welcome. I would personally like to thank you for taking this opportunity to allow me and my teammates to be your Forex mentors. Right? So what we have done is we have designed this whole entire online course into helping you become a self-sufficient trader. So without wasting any further time, let's jump into our first lesson. So what we're going to cover in this first lesson is introduction to Forex. We're going to cover technical analysis. We're going to cover what is fundamental analysis and what are trend lines, right? So we have set out for you these 3 basic steps that are going to help you master how to trade Forex. So you're going to start trading Forex. You're going to need first to familiarize yourself with our trading strategies. You're going to need to know our terminologies, educational article about the Forex market in order for you to understand the mechanics of the market. So what we want to do is we want to separate you from most traders, right? We want you to forget everything that you think you know about the Forex market, because in order for you to master how to trade, you're going to need to have a strategy that you're going to work on. So you need to master your own craft in order to master how to trade Forex. So secondly, we're going to need you to open a demo account first before working on a real account. It's entirely the same to real account. The only difference is that you're using visual money, which is not real money, right? So we have a video showing you how to open a demo account. So we want you to open a demo account of 1,000, and with all the skills that we're going to do, share with you, you're going to take 1,000 account into a 5,000 account. What we want to do is we want you to invest your time in knowledge first. We want you to master how to trade first before going to a real account, because most of the time people complain and say that Forex is a scam because they're only investing in something they don't even understand. So for you understanding how to trade, we are here to guide you that some mistakes are not necessary. So we're going to guide you in order for you to master how to trade Forex in the best possible way. So secondly, is to open a demo account, like we said, and the third step is to now, once you've done the second step, you get started on Forex trading. So once you've done those 2 previous steps, you can now start to safely begin how to trade. So we try to separate you from gamblers, right? We try to make sure that you don't use big bets. That's what gamblers do. As traders, we trade. Traders understand that in order for you to win, you need to have a statistical advantage, and that's what we do. We understand what's most important about trading is understanding risk management, and you understand it too. In order for you to win in Forex, you need to have knowledge. Knowledge gives you an edge over the market, and that edge will ensure that you are a consistently profitable trader. So firstly, we're going to discuss what is Forex. Forex is short for foreign exchange, right? So what we do in foreign exchange is changing one country's currency for another country's currency, right? So that's mostly what we do in Forex trading. So most of the time people ask me, what is it that we actually trade in Forex? The answer is simple, it's that we trade money. Because you're not buying anything physical, Forex trading can be confusing to most people. You can think of it of buying a currency as buying a share in a particular country, just like buying stocks of a company. So the price of a currency is usually a direct reflection of a market's opinion on the current and the future health of a respective economy. So in Forex trading, when you say buy Japanese yen, you're basically buying a share in the Japanese economy. So when you buy a share in the Japanese economy, you are actually betting that the Japanese economy is doing well and will even get better as time goes. So once you sell those shares back to the market, hopefully you're going to end up with some profits. So in general, the exchange rate of a currency versus another currency is a reflection of a condition of a country's economy compared to other countries' economy. Let me just give an example against, let me say USD dollar versus South African rand, which is the ZAR. The dollar has no actual value unless you actually compare it with the rand. So a dollar is $1, and when you take it to rands, it's actually 14 rands. So as you can see, if the dollar improves, it means the rand will actually suffer and it will decrease. So what we do is we understand the difference between those two, and that's how we make profits. So as we move on with the course, you can understand how you're going to do that as well. And that is what Forex trading is. So in Forex, we have our major currency pairs that we trade. And firstly, we have which is Euro USD. Secondly, we have USD JPY, which is the dollar versus the Japanese yen. I don't recommend using this pair once you're a beginner. This pair is for people who are a bit more advanced, as you know, it's extremely volatile. So Thirdly, we have GBP/USD, that is the Great British Pound versus the dollar. We then have USD Swiss, and we have USD versus CAD, which is Canadian dollar. That is one of my favorite pairs as well, which is extremely volatile, but it respects, support and resistance that you're gonna see as well as we go on. So second last, we have AUD versus USD, that's Australian versus the United States dollar. We have NZD USD, which is New Zealand versus the United States dollar. So those are the currency pairs you're going to be focusing on. So now, what is technical analysis, right? Technical analysis is the framework in which Forex traders study price action. Yes, we use price action in order for us to better understand what is the next price movement, right? The theory is that a person can look at the historical price movements and determine the current trading conditions and the potential price movement. Like I've said before, we use the data from the past in order to help us understand what is the next price movement. So the main evidence for using technical analysis is that theoretically, all the current market information is reflected in price. So if price reflects all the information that is out there, then price action is all one would really need to make a trade. So now that you have heard the old phrase that history tends to repeat itself, that's what we actually use in forex trading. We use the data from the past. We use what we've seen from the markets, which actually helps us, know what's going to happen next. So one is basically that what technical analysis is all about. If a price level is held as a key support or resistance in the past, traders will keep an eye for it and they base their trades around that historical price level. So technical analysts look for similar patterns that have been formed in the past and will form the trade idea believing the price will act in the same way like it did before. So we use the data from the past to help us understand what will happen in the future. But now we are discussing what is fundamental analysis, right? Fundamental analysis is basically trading news trading. Right? So fundamental analysis is a way of looking at the forex market by analyzing the economic, social, and the political forces that may affect the supply and demand of an asset. So if you've done economics, I feel like you can understand what supply and demand is. Supply and demand help us understand the currency exchange rate. So using supply and demand as an indicator of where the price will be headed is easy. The hard part is analyzing all the factors that actually affect supply and demand. So in other words, you have to look at different factors that determine whose economy is rocking, like a Taylor Swift song, and whose economy sucks. So fundamentals allows us to actually know when the economy is doing bad and when the economy is doing good. So you have to understand the reason of why and how certain events actually affect the market, like unemployment rates affect the country's economy, monetary policy, which ultimately affects the level of demand of its currency. So the idea behind this type of analysis is that the country's current and future economic outlook is good, their currency should strengthen. Right? If it's good, then it would actually strengthen. So the better shape of a country's economy is that the more foreign businesses and investors have in a country, the result in a purchase of the country's currency to obtain those assets. So in a nutshell, that's what fundamental is. Fundamentals help us understand what will happen next by how the economy is doing in terms of the economic, social, and the political forces that actually affect the entire economy. So fourthly, we have trend lines, right? Trend lines are those lines that you guys see when you look at the chart. People put in the chart that help them understand what is the next price movement, right? So trend lines are probably the most common form of technical analysis in forex trading. They are probably one of the most underutilized. So if drawn correctly, they can help you be accurate. So unfortunately, most traders don't draw them correctly, and we're going to help you understand how to use trend lines, right? They're very, very strong, and they're going to help you as well know how to trade forex. So these are the trend line, guys, and just like that, we're going to cover the last lesson of our introduction. So we have three different type of trend lines. We have the upper trend, which is seen by higher highs and higher lows. We have a downtrend, which has lower highs, and we have sideways trends, right? And those are the tools that we're going to need in order for us to understand how to trade forex using trend lines. As you can see, trend lines here help us understand that we have an uptrend, downtrend, sideways trend, and overall we will learn how to use these trends in order for you to master how to trade forex, right? And just like that, we are done with our first lesson. Thanks for tuning in and get ready for the next one.